to follow that up with an awesome live room sessions. If you guys are new to the live room, what we're doing here is we're doing live analysis. We're looking for trading opportunities. This is going to give you a chance to really implement and practically apply what you're learning through the trading courses to a live market environment. And that's extremely important because, as we know, coursework, book work, study work, that is all well and good, but the live markets are a completely different beast. The best comparison I can always make is, excuse me, it's very similar to learning how to drive, where I was taught at 5 o'clock in the morning in an empty parking lot. It was all good. It was all fun. It was extremely easy. And then once I got on the real road with all the crazies, it became a different story. So we want to do that here as a supportive resource as well, give you a chance to implement what you're learning in a live market environment. For you guys watching on the live stream, TradingView and YouTube, thank you guys for joining. What we're going to do here is we call this the trade of the day, where I bring you in for really the first trading analysis that we look at, then I let you go. So it gives you a little bit of a taste of the live room. And of course, if you ever wanted to join us for the full session, you can do so as part of your trial membership over at tier1trading.com. You get a lot more stuff as well, but this is part of it. Today, we are going to look at a news-based pair. One of the things we do each and every morning is we take a look, or at least I do each and every morning, is take a look at my economic calendar. I have no idea why it won't go to the screen I want it to. Things are being weird right now. Give me a second. Hopefully you guys can see it a little bit. Let me try this. Give me a second, guys. Try that one more time. It's bounced in between 3 different screens right now. Hopefully, there we go. Economic calendar for today. I personally use forexfactory.com. Honestly, it doesn't matter what you use. I'm just conditioned to using it for the last 15 years. And we don't have a lot coming out during the day, so not a lot of intraday news. We do have some tomorrow. Tomorrow we have CPI coming out for the dollar. We have a Bank of Canada interest rate hike as well. Today, however, we have a sneaky one at 10 p.m. with a RBNZ rate statement. That is going to be the Bank of New Zealand. And what's interesting about this news, we haven't talked about this in a while, especially as kind of we transition from a very high volatile time in the markets to a lower volatile time in the markets, is that news in the Asia session can be extremely scary. Now, why do you guys think? Why is news, particularly in the Asian session, particularly scary? We used to be, believe it or not, there used to be a period where we used to see these massive movements each time news came out. Again, that's when the markets were a little bit younger and moved a little bit differently. But yeah, there's low liquidity, right? The 2 major sessions of trading are going to be London, or the centers of trading, I should say, are going to be London and New York, right? The UK and the US, right? During this time, during the Asia session, both of those centers are closed, sleeping, right? Not very active, so less liquidity. You get a high impact news event in a market with low liquidity, you can see an elevated move, and we've seen this time and time again. So keep an eye out for that tonight, this morning, depending on where you're at, on with the Kiwi. Now, what we're going to talk about today for today's trade of the day is actually going to be the Aussie dollar. So it's the Aussie dollar doesn't have any interest rate decision coming out today, but if you've been in the market for any period of time now, you know that the Aussie dollar and the New Zealand dollar move pretty similarly, right? We can get into discussions about correlations, and you guys know how I feel about that. But there is a difference between understanding that some markets are heavily correlated and trading off of correlations, right? And here's a good example if you guys are new, right? If I just kind of split my screen here and I take a look at what's this, Aussie in one, and let's go New Zealand in the other, and we scroll out a little bit. I don't know why this one's not scrolling, but you can see very similar movement. Would you guys agree? Very similar movement in these pairs, right? And even looking at the last interest rate hike for New Zealand, right? This is going to be the third one they do in a row of 50 points, right? Looking at the last interest rate hike as well, Aussie moved exactly the same as New Zealand on that day. So essentially, that's a long-winded version of saying that the New Zealand rate hike will probably have an effect on the Aussie dollar as well. And this is what brings us to our trading opportunity. So there are many pairs like this. And if you remember, my analysis is still kind of on here. Aussie dollar was one of those pairs that we expected to go lower, right? We came to our green line here. We broke through with a lower low, lower close, and we spent some time last week projecting if price action went lower, where were we likely to go lower to? And we drew a nice little zone out there, right? 66s at the very conservative level, that 127 extension. At the much lower aggressive level, right below 64s. And of course, the AB equals CD pattern right in the middle. So we still have this longer term projection that price is likely to continue lower on the Aussie dollar. We head down to a 4-hour time frame, right? We start to see a little bit of a loss of momentum, right? High momentum, strong bearish candle, this red one right there. We got a little bit of a falling channel right here. Yep. Now, it wasn't a descending triangle this morning. That's what was mainly on my radar. So we may have to change our analysis a little bit. But we'll see how things continue. But yeah, a little descending triangle right here, all within consolidation. And then going down to the hourly, right? We still have it a little bit, but we're approaching the kind of the end of where we're going to destroy the integrity of this pattern. But this morning when I first did my analysis, again, this is about 2 hours ago, we had a descending triangle. And a descending triangle is a sign for a breakout. It technically still is. We'll see how far this thing retraces up. It technically still is. But the descending triangle is a very strong sign for a potential bearish break, a break to the downside, which would work hand in hand with our longer term continuation setup. Now, the deal is we've got a news event coming out. We've got an interest rate hike. The market already has priced that in. We know they're going to hike. Nothing has changed there. So what the market is going to be paying attention to is forward guidance, is what is going to happen next? What is going to happen during the statement? Are they going to remain hawkish in their interest rate hikes? Are they going to become more dovish in their monetary policy? And how the market reacts will depend on their opinion of that. So what we want to do in these situations, we want to set up a situation for, our analysis where we can predict if price action goes higher, then this is where we're likely to go to. If price action goes lower, then this is what we're likely to go to. Now, if you are someone, and this is kind of the next level stuff, if you're someone who has a fundamental bias, you can set yourself up prior to the trade. So if you had a strong fundamental bias that we're likely to get a dovish statement, right? So a dovish statement would take strength away from the Kiwi, take strength away from the Aussie. We'd see continued strength in the dollar, which we're seeing across the board anyway. What I would do in this situation is I would try to set yourself up in advance of the trade, right? If you have this descending triangle or this consolidation pattern and you're anticipating a bearish breakout, we know there's 3 ways to trade a break: before, during, and after. I would set yourself up for a before type of breakout. That way you're involved before that break to the downside. Again, that's if you're a fancy lad, right? And have a fundamental analysis that works in with your technical analysis as well. If not, then we're waiting for the reaction. And the 2 things we want to wait for is this, right? So if we break to the downside, then we look for our after break scenario, right? Where we can break to the downside. Oops, sorry, I'm not holding that on right. Break to the downside. There we go. Retest and continue down, right? Remember, the highest of our levels was 66. So there's plenty of room, right? We're trading above 67s right now. So there's plenty of room to the downside for even that higher level of 66. Vice versa, if we break to the upside, the question is, if we go higher, where are we likely to go higher to? Right? The first level we would like to go higher to is this previous level of structural support right here, which would act as resistance. If we break that level, then we're likely to test this level up here around 68. So that could set you up for a bullish opportunity as well. So what you want to do in this situation is you want to start predicting outlooks or outcomes in both scenarios. If we go bullish, then look for this. If we go bearish, then look for that. Obviously, in this situation, the bearish situation has a lot more legs on it, but you do have to be prepared for anything. So that is today's trade of the day. Aussie dollar based off the New Zealand, well, based off the technicals first and foremost, but kind of complemented by the potential or the rate hike and potential dovish or hawkish rate hike decision that comes out tonight or tomorrow morning, depending on where you live. Any questions on this setup? Let me know. I know there's a little bit of a delay on the live stream. By the way, live streamers, do me a favor, hit that like button before you head out. Live rumors, let me know if you have any questions on this. If not, we will head to our next pair. All right, sounds good. Real quick, YouTube got a question. Hey, Akil, doesn't the fact that we have a lower low, lower close on the daily give us a bearish bias? Yep, that is exactly why we have our bearish bias. You are correct. You are correct. Yep. Lower low, lower close below previous level of structure. If we get a lower low, lower close below previous level of structure, then we can predict that price is likely to continue lower. And of course, the next two parts of our prediction are if we're likely to continue lower, then where are we likely to continue lower to? And of course, if we're likely to continue lower, then how are we likely to get there? It runs like a machine if you guys are new, right? When you have this process, you run it like a machine. It's funny, we have I'm on a committee, an interview committee over the next few days, Thursday, Friday, and Monday. And whenever you're part of this committee, you get very specific questions and follow-up questions that you have to ask the different candidates and whatnot. So it's funny because it's like you ask one question and based on your answer, you just go to the next question. It's a process, and it's like this is the same thing we're doing in trading. It is just a process. If this, then that. If this, then that. Very robotic, very consistent, very efficient. Or is it just because we have a bias doesn't mean we have a trading opportunity? Yep, that is true as well. There's a massive difference between having a bias. There's a massive difference between making a prediction and taking a trade. I think that is one of the number one issues I see with the internet and people that are looking for a signal service. I will post something, and this is why I don't like posting a lot of public stuff, but I will post something which is simply a prediction. People will get short. The prediction will never happen. People will assume that we're in the same boat. Man, Akil, doesn't it stink that we both lost money on that trade? I'm like, hey. Both lost money? What are you talking about? Well, I got short and the market went long, so we lost money. Well, yeah, I get that. I see the chart. But why do you keep saying we? We. Well, you said you're looking to get short. Yeah, looking. If I got a trade entry, right? It's funny. It's like we all have those friends that they do something wrong and they try to drag us into it. Like, well, I had a friend like that growing up where like he'd do something stupid and his mom would like yell at him like, yeah, like we didn't mean to steal that from the store. We were just hey, no, you. I ain't steal nothing. Yeah, but we we're in this together. No. That's not how this relationship works. That is not how this relationship works. No. I stood outside. I remember me saying, you probably shouldn't do that. You'll get in trouble. And you did it anyway. Ain't no we in this, right? So that's the same thing you deal with online where it's like, no. But that's because people don't understand that there's a difference between analysis. There's a difference between making a prediction and there's a difference between actually executing a trade. Like I always like to say, we want to be predictive in our analysis, reactive in our execution. That brings on another subject of people saying like the whole concept of predictions in the market. We won't dig into that, but yeah, it's a process, right? You gotta do analysis first. Your analysis leads to your prediction. Your prediction leads to your potential trade entry. And then if everything lines up, meaning you get your reason for entry, if you get your risk reward profile correctly, if it's the right time of day where you're actually in front of your charts, then boom, you get a trading opportunity. If any one of those things isn't true, then you don't get a trading opportunity. But that is a lesson that many will learn. So a very good point. All right, YouTubers, trading viewers, booting you out. I'll see you tomorrow. Again, CPI and Canada interest rate hike tomorrow. So we got a busy day. If you want to, if you haven't seen it already, check out the Trading Edge video from this past weekend. If you want some of my predictions on what is likely to happen with that. Live rumors. Let me know if there's some place specific